Hello, can someone hear me? I don't have a voice.
I can hear you. If you can hear me, I can hear you. Just
Okay,
more people to join. Okay.
okay. I thought the meeting has started, but no,
No, no, I can hear
it's the
you.
problem from. Okay, thank you very much. Good day, Mr. Bami, right?
Good evening. Good evening. Yeah, yeah. Good evening. How's the weekend so far?
Good evening. How are you?
I'm very well, thank you.
I'm Ibrahim.
Yeah. Good evening, Ibrahim.
Yeah, thank you very much. I hope you're doing well.
Yeah. I'm good, thank you.
Okay, we appreciate your time.
Yeah, no worries. Thank you very much. I just want to allow a few more people to join.
You're welcome.
So I just want to allow a few more people to join, so I don't
Okay,
have to repeat. Yeah. All right. Thank
no
you.
problem. I don't have a problem with that.
All right.
It's a pleasure. Thank you. We're waiting. Thank you.
Right. Good evening, everyone. Please, if you can hear me, please type a one. If you can hear me, type a one. I want to be sure everyone can hear me. Fantastic, Ibrahim. Thank you very much. Thank you, Mark. Right. So, for those that are just joining for the first time, we have a curriculum that will go by. Um, I've, I hope you can all see my screen. Just type it two if you can see my screen. Type it two. Okay. Can you see the curriculum? Okay. Now, we go by a curriculum, and the way the course is structured is we go from beginner to intermediate and then to the advanced stage. At the beginner stage, what we try to do is to teach you the basics, set the foundation right, because anything you miss at the foundation stage, you are more than likely, it's not even more than likely, you are going to pay for it afterwards. So this stage is really, really important. You don't want to get to the advanced stage and be making silly mistakes, because the people you are competing with are people that have been trading for years, for decades, people on the top of their game. Okay. So you don't want to be making, silly mistakes, avoidable mistakes. Now, the way this curriculum is structured into modules, and each module we have things we want to cover under each module. So we've done module 1, module 2, and we're currently on module 3. Okay, we're on module 3. We are starting supply and demand today. If you are joining for the first time, don't worry. All of these other topics you can catch up at the back office. There are videos specifically recorded to address this topic, so you can watch them on the back office. I can show you how to pick them out. We also try as much as possible to record each day's session, so anyone that's missed today will be able to get a recording. Okay, 1 second. Right. So for today, we'll start at supply and demand. And the essence of this is that you need to begin to think. It teaches you how to think about how the big investors buy and sell this market. The whole game is about buying and selling. You want to buy low and sell high. You want to buy low and sell high, just like a trader. You want to go, buy a bag of rice for, I don't know how much it costs now, maybe 100,000 or 20,000. You want to buy for 20,000, and you want to sell it for maybe 50,000. Okay, so that's the whole idea. You want to buy low and sell high. Now, what I'm going to show you on the chart is how to identify supply and demand levels. Now, these things are called different things: supply and demand, support and resistance, psychological levels. Okay, they are similar concepts, but there are very slight variation differences between them. Okay, supply and demand, support and resistance, psychological levels, and I'll show you, the differences in a minute. But the whole purpose of today's topic is to be able to identify at which levels to trade from. Which level am I going to buy from? Which level am I going to sell from? If I go into a trade, which level am I likely to get out? Or what do I need to see to say I want to get out of a trade if I'm in a trade? Okay. All right. So let's go. I'll teach for about 30, 40 minutes tonight, and then open the floor for questions. Let's focus the questions on today's topic. I'm more than happy to entertain questions from other topics, but it will be of more benefit to stay on today's topic. But like I said, more than happy to take questions from whichever area of trading. Okay, yes, the session is being recorded. Let me prove that to you. 1 second. Yes. So is that confirmation enough? The session is already being recorded. Okay. So what are psychological levels? Psychological level, is as part of your technical analysis, you have what is called psychological levels. These are levels that are perceived as significant levels by traders. Significant levels by traders. They are often, round numbers. And why are they round numbers? Round numbers because these are the numbers that institutional investors work with. Big traders, they work with round numbers. They trade in millions, in billions. So it's easier for them to work with round numbers. Okay. Now, these levels are not based on any fundamental value, but just rather the collective perception of the market. So whenever the market gets to that level, they tend to sell. Whenever they get to that level, they tend to buy. Okay, there will always be a reaction at that level. Now, You hear these levels being called invisible lines, invisible levels, but it's all the same thing. Now we have two types of psychological levels. We have the 0, 0 or the halfway. The 0, 0 or the halfway. The 0, 0 are the perfect round numbers. The halfway are, for things like GBP USD, you have 50 levels, okay? 50 pips levels. I'll show you what that looks like on the chart in a minute. Okay. Now, I think it's even more important to just demonstrate it straight away. Just bear with me. Let me bring up the chart. And then again, I'll show you, I'll explain the slight difference between psychological levels and demand and supply levels. Okay. Now, this chart that I've opened up is GBP USD. Okay, GBP USD. If you've gone through how to calculate pips and all that, you would appreciate better the 0, 0 levels and the halfway levels. Now, for GBP USD, let's say you want to find a psychological level. The first thing you need to do is wherever the market is at the moment. Okay, you look for a perfectly round number. The perfectly round number, for example, the market is here 1.34364. The perfectly round number we have here is 1.3500. 1.3500. Let me put a line there so that you can see. 1.3500. Okay. The line is not exactly on it. I can double click it and make it 1.3500. Okay. Double click it and go to coordinates and make it 1.3500. Now, what will be the additional evidence that you see to be convinced that this is a psychological level? Now, I've said psychological levels are levels that institutional investors, majority of traders like to trade from, either to go into the market to buy or sell or exit the market. Okay. Now, what are the signs? So look at here, for example, when the market got here, the market was coming down. When the market got here, you can see this rejection. It's getting close to a rejection until it broke it, and then people attempted to buy. Okay. Now, if you look to the left, always look to the left on the chart. What did you see here again? Market was going up. At the time the market got to this level, there was reaction. Okay. The market could not break it easily, and then it put back. Again, he attempted the sell until he broke it. Now, if I keep looking to the left, you will keep seeing similar stories. Okay, rejection was coming down, rejection, and then he attempted to go back up. If I go to the left, see here was going up, rejection. So that's additional proof that that is a psychological level. Okay, now I did say there are 0, 0 levels and halfway levels. The halfway levels for GBP USD, for example, you measure 50 pips. Once you found your psychological level, you're measuring 50 pips. Okay, measuring 50 pips from there. Okay, if I get my ruler and go 50 pips, so this is 50 pips, that means the next psychological level will be 1.34500. That's your 50 level. Now, if you attended the class where we taught how to calculate pips, you would have known that this level, a second, that is, okay, you would have known that that's this level. You ignore the last digit. Okay, so let me make this a perfectly round number. Okay, 1.34500. The numbers to worry about is the 4 digits, 4 decimal places. Ignore this last one. So if you're calculating pips, your 4 decimal places. So from here to here is 50 pips. Again, if you look to your left, you see that that level is a psychological level. See what happened at that level. See what happened at that level. So that's how to get your psychological levels, and you can then continue to measure like that, go up or go down to find your psychological levels. Why are these levels important? If you are looking, for example, if you are selling this market, you'll be watching out for what is happening here as part of your trade plan to either take some profits, book partials, or come out of the market. But if your projection is that the market will go for like 100 pips that day or 150 pips, your only job is to make sure that when you get here, you see what is happening here to see whether the market will indeed break it or not. Okay. This is why psychological levels are important. Anyone selling, following this market, you say, okay, what's going to happen here? Let me see what's going to happen here. Either I'll come out. If it doesn't break it, if a candle doesn't close below it, that means it's not breaking it successfully. Equally, if you are planning to buy this market and your analysis is to say, oh, the market will buy at some stage today, your job is to look at what happens around this psychological level. You're looking for price action. You're looking for either pin bar or Morningstar or bullish engulfing. You're looking for price action to confirm that a buy action is about to happen from that level. Now, that's for GBP USD. For some instruments, for some pairs, the halfway line does not make sense. What is more relevant is the 0-0 line. An example of such pair is GBP JPY. Why? There's a reason for that. If you look at GU, for example, if I put it to daily time frame, GBP USD would tend to move for like 120 pips, 150 pips max daily. Okay, let's measure this candle. This is 96 pips. Another day, this is 94 pips. Let's measure this day, this green one. That's 111 pips. So what does that tell you? It tells you that GBP USD moves typically for about 100, around 100, 120 pips daily. So it makes sense to pay attention to the halfway level, the 50 level. This day was 150. So it makes sense to pay attention to the halfway level. But GBP USD, JPY on the other hand, if I go to GBP JPY, okay, as an example, I go to GBP JPY, the daily move on GBP JPY. So let's cancel this. Daily move on a GBP JPY candle. So let's measure a GBP JPY. Let's take this day, for example. It's usually more than 150 pips, usually for GJ, except what you don't have. So this day, for example, was 234 pips. If I measure this one that is even small, that one is 97 pips. So it typically makes more move than GBP USD. So this is why the 100 levels are more relevant for GBP JPY. Okay, so you need to know the levels that are relevant. So, and I can prove it. Okay, so look at this, for example, there was rejection here. Okay, if I measure this O candle, it's more than 100 pips. So why would you be looking for halfway levels here? So the 0-0 levels are the more relevant levels for GJ. Okay. Yep. So this order was 273 pips. So the way to identify psychological levels for an instrument like GJ is to come to a 0-0 level and measure from there. 0-0 level. So if I place my line on this one, for example, on 189.00, you can see that there were reactions around there. There were reactions around that level. So someone is asking, can you confirm the psychological level by looking at previous time frame? So psychological levels are time frame agnostic. So it doesn't matter. They remain the same if you change time frame. So let me show you that, for example. So if I change to 15 minutes, for example, you will still see reactions at those levels that I've drawn. Let me try and go to, let me look for them where I drew the line. Okay, so if I change to 15 minutes and 15 minutes time frame, you still see reaction at those levels. Let's see, the market has gone far away from there. Let's see. Let me see. Okay. Bear with me. Okay, so let me plot again on this level. So let's take a round number, 1 point, so let's take 192. Okay, this is a psychological level, 198, 200. So this is 15 minutes. If I go back to 1 hour, for example, it remains the same, okay? It remains the same. Now, one thing to note is that for psychological levels, you are looking at a perfectly straight line, okay? Perfectly straight line. But remember, we said psychological levels and demand and supply. Now, the slight difference between demand and supply or support and resistance is that you need to think about those levels as zones, okay? As zones. And how do you know that? Okay, let me change. Don't know why this is not changing. Am I still on? Sorry, apologies, I lost connection. I think I'm back on now. So I was saying that the way to think about psychological levels, they are straight lines. The slight difference between psychological levels and the support and resistance or demand and supply is that you think about those as zones. Okay. Now, what do I mean by that? So this one, for example, is a straight line. If I want to identify support and resistance, okay, support and resistance are levels that the market is likely to change direction, okay? So what does that mean? When the market gets to that level, that means if the market is going up, it's likely to change direction to come down. If the market is going down, when it gets to that level, it's likely to change direction to go up, okay? So you think of resistance as a ceiling and support as a floor that you cannot dig deeper, or a ceiling that you cannot break. Okay. Now, why is that relevant? Now, if I take these levels, this market, for example, okay. Now, if I'm identifying support and resistance, if I look at this level, this is around this level is where the market is rejecting. It's going up, but by the time it gets to this level, it cannot go further. The same thing about support, okay? All this level, if it gets there, is not dropping further, okay? So that's this slight difference between support and resistance or demand and supply zone compared to psychological levels that are perfectly straight lines. Now, whether you do demand and supply, or you do support and resistance, or you do psychological levels, what is important is that you are able to identify where the market is likely to reverse. They're important because there's high probability that the market is likely to change direction from there. Now, another way to validate is to always look to your left, okay? Look to your left, because in trading, we have what is called repeated patterns, repeated actions. Things always repeat themselves. Things always repeat themselves. So always look to your left. Oh, when the market was going up the last time, where did it change? When it was coming down, where did it pause to change direction, or where did it stop to change direction? As simple as that. Whatever time frame you are trading in, support and resistance zones, you can easily identify them by looking to your left, okay, to see where the market is likely to change. Now, this is GBP JPY. If I change to GBP USD, is the same concept, the same principle. Where is the market likely to change? Now, if I ask anyone now, you can all unmute. Let's make this interactive. Let me allow people to unmute. Anyone that's confident enough to say on this chart, where is the resistance? Just call out the price or type it. Which zone is the resistance on this chart in this time frame? Anyone?
I can try, maybe.
Go ahead.
Resistance is, I think I can't show it because I don't have access to
You can annotate.
to
Click on annotate at the top of your, at the bottom of your screen or the top.
okay, what should I?
Click on annotate and draw. Draw the zone that you think is a resistance or support.
Yeah, but I can. I'm looking for
You're looking for
um.
annotate. So on,
Yeah, I
okay.
got some. Yeah.
So
Okay.
draw,
Let me try. I think the resistance, right?
yeah,
You said
resistance, yeah.
okay. Okay. I think if I could try, I can set the resistance could be here, and the support uh, could be here.
Yep, fantastic. That's well done. So
Wow.
let's do it this way. So this will be your resistance zone if you are doing
Yeah.
resistance, and this will be your support zone if you are doing support. But what you need to be mindful of is when the support is broken, you see a
Okay.
candle closing below it, full body candle closing below it. So by the time you are seeing that, that means that support level is likely to have been broken. And it's just a matter of time for it to. So see this one, for example, this candle closed below it. Now it was just a matter of time to get more momentum to continue to push down. So if you see this, for example, is to put you on notice that this support level is now broken, and it's just a matter of time for it to continue to go down. So what you should give more higher probability to, higher priority to, is a sell. By the time you see that full body candle closing below a level, it's a sell. So if you're in a trade,
Can you please,
Mhm.
sorry, sir, sorry, I interrupt you. Can you
Go
please
ahead.
uh, explain what you just said, a closing candle? I don't get that one. Can
Okay.
you show me the candle that
Uh,
it's been closing?
okay, 1 second. Now, so you
Okay.
can see that this market
Okay.
picked up from here. It got to this resistance. It sold from there.
Okay.
Again, because it's a resistance, it sold. It got here. It tried to buy. There was not enough momentum. It tried. There was not enough momentum, and then it broke it. Now, this candle here is a full body candle. This one.
Okay.
Yeah, this candle here is a full body candle. Now, what this is telling you is this candle close below, this candle close below. It's just a matter of time. It's already giving you signal that the market has broken that level. Okay?
Okay.
That the market
Okay.
has broken that level. Yeah?
Okay. Yeah, understood.
Now, if you are in a trade and you see all these, now if you are buying, let's say the market broke this again, see this, the market broke this level, and then a full body candle closed. And then what happened? The market continued to trade above that level until that level is broken, which this candle broke it by this, this candle broke that level, a full body candle closing below it. This candle broke that level, and what happened? The market started trading below that level. Okay, so being able to identify support and resistance zones, demand and supply zones, is a very, very, very important thing. And when you see levels broken or levels are holding, you trade appropriately. Okay. Now, if you're in this trade, if you get in here, if you get in, let's say you are following this trade, I'm pretty sure if you look far to the left at some point, this level would have been a resistance. Okay. All these levels would have been a resistance. So market sold from here. Guess what? The next time the market will approach that level, there will be some reaction. Okay. Let me draw.
Okay.
There will be some reaction. Okay. So market sold from there. See what happened the next time there was reaction. The next time the market struggled before it broke it. This is why these levels are important. Okay. That's why they are important. You are not just drawing them because you want to be able to identify them. You are using them to plan appropriately for your trade. Okay. To plan appropriately for your trade. So that's why support and resistance, psychological levels, or demand and supply zones are important.
Thank you very much, sir. But sir, I have a question that I wrote here already. Though it's likely you answered the first question that I said, how can we identify a rejection of a market? First, secondly, are we measuring the level based on it was a mistake. I write based. I mean based on the numbers written on the right hand side where the what do you call it, pips are being fluctuating, or how, I mean, those three levels that you just mentioned, the 0 0 level and the halfway level and the 50 level. So how can we understand and identify them?
Okay, I'll take that again. I thought it was.
Thank you very much.
I'll take it again. So you have
Thank
the
you very much.
0 level and the halfway levels for psychological levels. If you are using psychological levels, you have 0 level and halfway level. Now, how do you identify psychological levels in the market? Now, wherever the market is, let me go to this one. The market is currently, let me cut the market and just say, let's go further back. Let's go further back. Let me cut it more. Okay. Now, the market is here. Okay. Let's say the market is here. Let's remove our drawing. The market is here. What do you want to do? You want to identify the psychological level. Now you look at where the market is currently. Okay. This is the current market. You are coming to the market. You are coming to your chart. This is where the latest candle is. Now, what do you want to look for? You want to look for a perfectly round number. What do I mean by a perfectly round number? You are looking for numbers like 1.3. Bear with me, please, my screen. You are looking for numbers like 1.3000 or 1.3500. So these, for example, sorry. Okay. So this, for example, is a round number, 1.3500. Okay. 1.3500. Or if you don't want to use that, you look for another perfectly round number. Another perfectly round number close to here is 1.3600. Okay. Now, what do you do? Once you identify a perfectly round number like that, you place your line there. Okay. Make sure it's exactly on it. So 1.3500. The next thing you do is you measure 50 pips to either side. Okay. You don't need more for GU, you don't need more than 2 or 3. Okay. Because the daily candle is usually around 100, 120. Okay. So measure 50 pips to the downside. Measure 50 pips to the downside. Okay. 50 pips to the downside. Okay. So again, we want to make it round number. So that's 1.3450. Okay. And then you do the same to the upside. So those are your psychological levels that are relevant for that session that you are trading. For that session that you are trading, you don't need a lot. Okay. You don't need a lot. Now that you've identified those levels, the additional confirmation you can do is look to your left. Are those lines you've drawn? Did you see reaction around there when the market got there? The answer is yes. There's reaction here. When the market got approached this level, yes, there's reaction. Yes, there's reaction. Yes, there's reaction. Is that clear?
Yeah, it's clear, but the only thing is that how can I understand when the market, because I couldn't see the reaction of the market there.
Okay, so the
First,
reaction of the
second,
market. Okay, go on.
secondly, I would like to know how many times should I measure the should I use rounded number to measure uh, the level?
How many times? Now,
Like,
like I said, okay, this is relative to the instrument you're trading. These instruments, GBP USD, usually move around 100 to 150 pips daily. Okay. Now, what does that tell you? If you take 250 levels, so if you measure 50 pips, if you take two of them, that's already 100 pips. So
Okay.
you don't need more than 3, maximum 4. Okay.
Okay. I
So
got that.
yeah, so is that clear? So the additional validation you are then looking for is the price action. Okay. Now,
Okay, sir.
what does that mean in simple terms? Let's even leave candlestick price action to one side. By mere looking at these lines that I've drawn, what happened? The market was coming down here. By the time it touched that candle, there was reaction, meaning that there were people waiting to attempt to buy the market from there because it's a psychological level. Okay.
Okay.
Again, if you look to your left, the market was coming down. Again, there was reaction around this psychological level because people are waiting there to buy. Again, if you
Understood.
look again, it's the same thing. You see that repeated pattern, and that's the additional validation. Here, market was going up. When the market approach got to here, people started selling because it's a psychological level. You understand?
Understood.
Yeah.
Yeah, very clear, sir.
Okay.
Thank you very much.
Welcome. Babati, please go ahead and unmute.
Uh, Excuse me, Bossman. Please, this psychological level you're talking about, is everything just 50 pips, or you use like 100 for separate one, 50 for separate one,
Now,
or you just measure 50, 50?
like I said, it's relative to the instrument. Okay. GBP USD, for example, moves around 100 pips, between 100 and 120 pips daily. So stay unmuted so that I make sure you understand. So what does that mean? If you are looking for 100 levels, okay, that if by the time you have 200 or 300 levels, 00 levels, the likelihood of GBP USD making that move in that day is low, except you have something very, very significant that has happened. But if you compare it to GBP JPY, I showed the example of GBP JPY. GBP JPY moves by more than 200 pips on average every day. So for that kind of instrument, the 100 level is more relevant rather than the 50 pips. Do you understand that, Babati?
Sorry, you mean most of the JPY, it's okay to just measure 100 on your
Yeah,
chart
just use 100 levels as psychological levels.
when it comes to JPY.
Yes, use 100
Okay.
levels. I can demonstrate it to you. So let's go to JPY. Okay, and you see it yourself. You don't need to take my word. Just look at what the chart is telling you. Okay.
Okay, boss.
So look at here. Look at here. Okay. This is not 190, 194, 400, but let me make you 4 hours. Look at 100 level here. 194.00. See what happened. Market rejected. Again, market rejected. So those levels, 100 levels are better for instrument like JPY. Yeah.
Sir,
Go.
one last question. The psychological level, is it okay on your entry time frame or the bigger time frame?
So sorry if you're not asking question, please mute yourself. So
Sir,
they're
I
recording.
said
I can
the
hear you. Hold on, Babati. The
okay,
message is not for
okay,
you, it's for others.
okay, boss.
If you're not asking question, please mute yourself. Otherwise, I'll just mute everybody, please. Okay. So that we can have a clean recording. Right. So
Boss, you understand my question? I said the psychological
you
level.
are saying is it for entry time frame or higher time frame?
Yes.
I've already mentioned that. I said it is time frame agnostic. Psychological levels are time frame agnostic. Okay. Um, it doesn't matter whether it's 15 minutes or 1 hour or 4 hours. Those psychological levels, you will always see a reaction around them, whether you put it to 15 minutes or 1 hour or 4 hours. Now, there's a slight variation if you are using support and resistance zones. Higher time frame support and resistance zones are stronger than lower time frame support and resistance zone. What do I mean by that? This is 4 hours. Okay. Let me remove all of these things, drawings. This is 4 hours. If I was looking at this, 4 hours, this would be the resistance zone at some point for this instrument. But I tell you, if I go to 15 minutes, there will be zones that the market have rejected in lower time frame. Okay. So let's do this. So reset. Let me identify another support zone first, and then I'll prove it to you. Okay. So this is a support zone. Now, if I go to between here and here, if I go to 15 minutes, you will definitely see levels where the market has rejected. So in higher time frame, this was a level, but if we put it on this time frame, you can see within this time frame, there were other levels in 15 minutes. Does that make sense?
Yes, sir. It makes sense, sir.
Okay. All right. So that's the slight difference between support and resistance zone and psychological levels.
And boss, the supply and demand, is it okay to use the higher time frame for it when you want to apply supply and demand?
It depends on your trading system and your trading style. At FAR pips, higher time frame is stronger than lower time frame. So we let you know that, we teach you that to say higher time frame is always stronger, yeah, than lower time frame. So if you are trading, you're a day trader, you've gone into your entry in your entry time frame in 15 minutes, and you are looking to trade the whole of our session. You just need to be aware of the different levels in 15 minutes, 1 hour, and 4 hours. Okay, you need to be aware. And your job is then to look at what is happening at that level when the market gets there. Is it giving you a signal to say it's time to get out of the market? If the answer is yes, you jump out. If it's giving you a signal to say it's time to enter, if the answer is yes, you enter. Okay. How do you know that? Is the price action? Is the rejection? By the time you start seeing multiple wicks, multiple candles, like here, you see this candle rejected, the next one rejected, the next one rejected. Okay, that's giving you information. Now, you won't want to use 4 hours for that. You want to use 15 minutes to be looking at those rejections. Okay, by the time you see multiple 15 minutes rejection, that is giving you a lot of information. Does that make sense?
Yeah. I'm very sorry. I see it will make sense if you can just back test, show a sample on it.
Okay. Now, see, this is 15 minutes time frame. Yeah.
Yes.
Let me cut this. Let's assume that we've entered our trade from around here. Yeah, we've entered our trade from around here. We've entered trade from around here. Why is this not going on? Yeah, but we've identified this level based on our top-down analysis. We've identified this level as resistance. Okay, but in this example, we are buying the market. Yeah, let me go back to 15 minutes. We are buying the market from here. We are buying the market from here, but we have already identified this level as a resistance based on what happened. Now, what are we looking out for? We're looking out for multiple rejections around the resistance. We bought from here. We are going this way, this direction. Okay, we are going this direction. Now, this is the resistance we are targeting. Yeah. Now, what did we see? The first thing we saw is this candle here. This red candle rejection. The next one candle open below it. The next one rejection. By the time you are seeing these 3 candles, it's giving you a lot of signal that it's time to get out of the market. Does that make sense?
Really? Wow. Okay.
Sorry, are you talking to me, Lady Joe?
Oh, sorry, Mr. Bami. Yes, I was following you, but I was so deep in it because I had a question that how do you notice when to get out of the market before it goes down? Before you just say this now. I was just thinking about that in my head, and then you just answered the question.
Okay, that's fine. The next
Yeah.
example is here. See here, this is a resistance. This candle rejected, you saw the wick in 15
Yeah.
Another candle is telling you it's time to get out. If you were buying this market, the market is communicating to you, is just for you to listen. Yeah.
Okay.
Now, if
Okay.
you
So
at the market at the right level, chances is that that you would have had enough, pips in the market, in the bag. You'd have had enough pips in the bag.
okay.
Okay.
Yeah.
So if I measure from here to here, let me measure. If I measure from here to here, this is already 80 pips. If you have the right lot size, the right account size, 20 pips is for you to ball, is enough. You don't need the whole of 80 pips F. Okay, you don't need the whole of the 80 pips. But that's 80 pips that you'd have caught if you had proper entry. Yeah? Okay. All right.
Okay.
Any more question from anyone?
Yes, please.
Yes,
I do have
Mr.
a
Bami.
question,
Go
Mr.
ahead.
Bami. Good evening, and good evening, everybody. Please, what I want to know is that is it when you always see the three arrows, like one here, like the one that you are just showing, by the green one, the end of this arrow, the green one, and then the red one that is pointing up, and then you see a small one there, then that's when you know that you shouldn't buy anymore.
No.
Oh boy.
Wait.
Okay.
The class last week was
Yes.
Candlestick Price Action.
Okay.
A book called Candlestick Bible. Yeah. Now,
Okay.
multiple week rejection is a way of knowing that the market is not ready to go higher or lower at that point in time. But what you are supposed to be looking out for is price action.
Yeah, how do we identify that, sir?
Okay, so if I ask you, were you in class last week?
No, which of the days, sir?
Last Saturday.
No, I wasn't.
Okay, if you can watch the video, I can show you the video.
Please, I would love to have that with this one as well.
Okay, so if I ask you now that what is this price action? This one here.
To be honest,
you don't
to
know.
be honest, I don't know. To be
So
honest,
this price action here is bullish engulfing candle. Bullish engulfing. So that's a buy price action. If you see this, the next thing you want to be doing is to buy this market. Okay, this next candle is confirmation. What you want to wait for is for this market to pull back and buy. So for the example, if you cut it on this candle, this one,
yeah,
stop loss here,
yeah,
and you follow here, this one is not enough for 1 to 2. I wouldn't take this because it's not quality trade. Okay, but
okay.
if you are catching it from somewhere like here, okay,
Yes, please.
so this one is this price action here
Yeah.
is let me delete this. This price action here is what you call bullish Arami, confirmed by this candle. Yeah.
Bullish what?
Bullish Arami.
Bullish Arami, okay.
Now the next thing you want to do is to wait for a pullback on this price action. The pullback happened here. Now, if you cut this one, let's say you cut it on these candles,
yeah,
your stop loss is below here because that was the last rejection.
Yeah.
And you are targeting the next resistance. Okay, the next resistance is here. Okay, that's 1 to 2. Okay, by the time the market is getting here, you're able to come out of the market. By the time you got here, you catch your 1 to 2 neat. Okay, you catch 2 neat.
Hey, Father, help me.
It will
This
help.
this candlestick that is going up and down like this, sometimes it's a bit, but the Lord will help me to understand it.
That candlestick going up and down is money.
It's okay, but the one thing that I really need to know is to know when to get in, when to get out.
Yeah, that's the whole essence of this class.
Wow.
What you should do is rewatch this class at the end of the class. That's the essence of this class. The essence of this class is to know where the market is likely to change direction. Yeah. So support and resistance are levels where the market is likely to change direction. Yeah.
Okay. Like the one they said is bouncing on the ceiling. That one. How do you identify when
ceiling is resistance? Forget all this big grammar. Ceiling. You can't go. If you are in your house, can you jump and break the ceiling?
Mbanu is not possible.
Mbanu, you can't. Okay. That means the market too. When the market is approaching the ceiling, it will struggle to break it. That's resistance. Yeah.
Okay. All right.
The floor. You are standing on the floor. If you jump and jump, can you break the floor?
Mbanu is not possible.
So that means the market too will struggle to break the floor. That's So when
That's why they call it resistance.
resistance and support, because it's acting as a level, support level where the market cannot break.
Okay.
But it's time frame specific or market session specific. Okay, just for that, market session you are trading, that time frame you are trading. It is not that the market will never break that level, but during that period, the probability that it will break it is low.
Okay.
So it will try for multiple times and then it will succeed. Okay. Like here,
Okay.
he attempted to break it here. He tried here until this candle started closing above it. Okay. And finally, it broke it for a while and then came. The next time this market is getting to this level, it will break it because it has attempted and attempted and attempted. You understand?
Yeah. Hell, Father, it is well. I have another question, sir. Like when you trading GBP JPY, what time frame do we normally program it? And like when one is trading in the morning, because I heard about the morning trade, London time, New York time, and the Asian time, and the fourth one. Like when one is trading in the morning from 6 o'clock in the morning, that Mr. Jeff said. What time should one place the trade frame? Like, when we are buying JBP, JPY, should we place it on 15 minutes? Because last time I tried to copy trade and I lost a little bit. So, what do we do, sir?
So I will suggest if you are doing signals well, use more money, but I will recommend try to copy those signals on demo account first.
Oh, okay.
To master the art of copying, otherwise you'll just be giving your money to people like us.
Okay.
All right. So to answer your question,
yes, sir.
Depends on the system you are trading. If you're a day trader, you use 4-hour time frame to do your main direction. Okay. And you use 15 minutes as your entry time frame. Your entry time frame. Now you start doing your analysis, you look at 4-hour. Some people will look at daily as well to see what's happening on daily or what happened previous day. But you only use your 4-hour to plot your levels, to identify your trend, to see where the market got to the previous day and which levels are likely to break. Okay. Now you come down to 1 hour and then 15 minutes. If you see trend line or inner trend line in those lower time frames, you identify them. Okay.
Okay.
Now you now use 15 minutes as your entry time frame as a day trader. If you're a scalper, main direction, main trend line, direction time frame is 15 minutes, and you're using 5 minutes for your entry. Some people will even use lower time frame, 1 minute for entry. Okay. So 1 hour, 15 minutes, 5 minutes as a scalper. 1 hour, 15 minutes, 5 minutes. Day trader, 4 hour, 1 hour, 15 minutes. Those are the time frames you are using. Does that make sense?
Yes, but how do one identify which one is? Because which one am I? Am I a day trader or a scalper? How do we know that?
Far piece to day trade. Day trade.
Sir?
A far piece with day trade is day trading, but within that day trading, there are two main market sessions that are relevant: London session and New York session.
Okay.
Yeah. Now,
sir.
I ask you now, which time frame am I in?
Now is in the evening, so
no, which time frame? Forget the time frame. This chart. Which time frame is this chart?
Let me see. Okay, let's see.
Anyone, if you know the answer, just type it. If any other person knows the answer, just type it. Okay, can you see the answer? People are typing the answer for you.
15. Oh, 15 minutes.
Yes. So
okay, that's the time frame. Oh, the one that is on top here, like 1 minute, 2 minutes.
Yeah, so if I change it now, this is 1 hour, this is 4-hour time frame. Okay.
Okay, those are the time frames.
Yeah, but this is different from market session, no, it's just time frame.
Okay. Okay. Now I know. Yeah, I know now. Thank you. Thank you, guys.
Let others so ask question, yeah?
Thank you, Mr. Bami.
You're welcome.
Hello, boss.
Yeah.
Sorry, for
Yes, sir.
instance, this main entry we usually do this breakout signal.
Mm-hmm.
There are sometimes that they usually get to some resistance level on the 15 minutes,
Mm-hmm.
and instead of it to buy because of the breakout, it broke up, it will reject.
And because that level is a resistance level in 15 minutes. But
Yes,
what you should be thinking about is, okay, the person that called this trade or this signal, what did he see to call this trade? It might be that there's a higher level, another level in a higher time frame. Maybe the market is coming from a demand level in 4 hours, or maybe a resistance level in 4 hours. It doesn't mean that you will not have reaction when you get to a resistance level or a support level in 15 minutes. You have reaction, but the higher time frame levels always supersede. It's only a matter of time. You understand? So if you are patient enough, that day, you'll probably go that direction.
because on this thing you just said now,
Mm.
most time I've already placed a buy that the market will take me out and move my direction. Like I recognize that this thing already broke the resistance. After it retest,
Mhm.
I take the buy. Then it will just later take me out and go that same direction.
That happens. That happens. Sorry, if you are not asking question, please mute first. I'll take your question. Otherwise, you would stop this recording. Sorry, Babati. So sometimes that happens. Um, when you're trading, sometimes you done everything right, and the market still takes you out. That's why trading is always a game of probability. Your job is to identify trading opportunities that have higher probability of playing out. So that's why you look for quality trades. And that's why you also apply consistent risk management and consistent trade sizing, lot sizing. So for beginners, I recommend just use the same lot size for now. Okay. Don't try and open too many. That's the only way you can measure your performance. That's the only way you can measure whether you are waiting patiently to get in at the right level or you are rushing into your trade. By the time you use multiple entries and different lot size, different times, you will not be able to measure your performance. You understand? So if you're using the same lot size, maybe one position or two position or three position, but it's consistent, it's the same, and you are risking about the same stop loss, you over time discover more about your trading style, more about yourself. Whether you're rushing into trades, whether you're staying in trades for too long, you will find out all those things. You understand? And that's how to improve.
Okay, boss.
Yeah.
Please, before you end the class today, please can you just explain supply and demand for the last time? And
Ah,
one more
you
time.
know everything I've said this body. Okay. Let
I
others
mean, like just straight. I understand this. Like just
Hey,
straight.
Babati, don't worry. This class is being recorded. You will see
Thank you.
you. Let Mark
But
answer his
boss,
question. Mark, go
sorry.
ahead.
I find this hard to look for like previous recorded class,
Okay,
like the one I'm seeing on the
I will show.
website.
I will show. Don't worry. Before I end this class, I will show you.
Okay.
Excuse me, sir.
Good evening, Mark.
I'm fine, thank you, sir.
Yeah.
So my question with supply and demand, yeah, we have been the first analysis you made was in 4 hour and 1 hour time frame. And you earlier said that at Fire Pips we trade we make analysis at using the bigger time frames. Isn't it?
That's correct, but we use 15 minutes for entry.
15 minutes for entry specifically.
Yes.
Oh yeah, that was my question. I just wanted to confirm. Thank you very much, sir.
Welcome.
Another thing on this same chart,
Mm-hmm.
I've applied the strategy of what of lines of drawing trend lines,
Mm-hmm.
and it is and I'm seeing some trend lines actually go with the support and resistance. What support and resistance? So does it actually work to combine both the methods when you are making analysis for a chart?
It works, but the more confluence is called, so the more things align. So you have, okay, now we talked about support and resistance. Yeah.
Yeah.
Support and resistance are horizontal. Yeah. This is horizontal. Yeah.
Yeah.
Hold on. Let me draw it again. This is horizontal. Yeah.
Yeah.
Sorry. This is horizontal. Now we are drawing this because we are saying this is a level that the market is likely to reverse. Okay. Again,
Yeah.
we draw a support. A support, we say, oh, that's a level that the market is likely to reverse. Okay. Now, the other thing that is also a support and resistance is a trend line. An uptrend line is a support and a downtrend line is a resistance. So if I draw a trend line from here, let's say I'm drawing a uptrend line from here, we call it a diagonal support and resistance. Okay. The market picked up from here, it got here. We only need these two touches to form a valid uptrend line. By the time the market is approaching it again, see what happened. It rejected its buy opportunity again, buy opportunity. The same way that the trend line, uptrend line acts as a support is the same way that the downtrend line will act as a resistance. Okay. So where's the example? So that's a valid trend line from here to here. The next time the market got there is sold. Okay. You might think this is small, but if I pull it up, you'll be shocked the number of pips at that level. Okay. So let's measure at this level. How many pips did we get? We would have been able to catch 200 pips. So uptrend lines are support and downtrend lines are vertical resistance. Does that make sense? So if you now find an horizontal support that's you combine that with an uptrend line, what do you have? You have two confluences. That means you have more reason for that trade to play out. Higher probability, quality trade. Now, Jeff sends signal. Sometimes you don't see these things, but you would have analyzed it and have factored it, but because he wants to keep the signal clean, all of his drawings will not be there. You understand?
Yeah.
So those confluences, if you see an horizontal support confluencing with a trend line, I'm telling you that's a higher probability trade, a quality trade that's likely to play out. Yeah? Okay. Let's take the last question, Stanley.
Please, sir, I have a question, very short one, if you could allow me to. Just very short one.
Ibrahim, you've asked a lot of questions. Okay, go ahead.
No, I'm sorry. Sorry, sir. Please, sir, is about the signals that the Mr. Jer is sending us. If, let's say, he send a signal, I know how to enter a market and I know how to maybe fix my stop and what do you call it? Stop and take profit, TP and SL. So apart from all of this, fixing all of this, is there anything special that should be done? Or if I know how to fix my SL and how to fix my TP, I could be done with the signal. Like I could use the signal.
Yes, if you know how to place your TP SL, you can take the signals, but you also need to monitor updates on those signals because sometimes the market would not get it to the TP and Jeff would have posted or close your trade now. If you're not monitoring the update on that signal, you're likely to not win that trade. Even if everybody is making money, you're likely to lose.
Thank you very much, sir. I appreciate it.
You're welcome. And always pay attention when you see the signal, pay attention to the time on the chart. Because if the market have moved too far away from, when it posted the chart, is either you wait for the market to try and pull back to that level or leave that signal to another one.
Okay, sir. Consider it done. Thank you.
Hi. Oh, hi, Mr. Bami.
You have to wait.
Hello, sir.
You have to wait. Wait for Stanley, please, Glenn. Stanley, please go ahead.
Yes, sir. Good evening.
Good evening, yeah.
Yeah, please, I just want to know if it's necessary, like when you are using the psychological level, is it necessary that you also have to use like when you are plotting from last week high and last week low, like to use the two at the same time? Is it necessary in one chart?
I'm trying to understand your question. Is it necessary to look at? It is important because then that gives you more information. It tells you where the market got to the last week. so that when you get there this week, you look out for what is likely to happen there. If the market has already set a high last week and is not going throughout the week, is not even attempting to go back to that high, and that tells you a lot of information to say, oh, the market is going to trade lower below that high. Okay?
Okay.
That makes sense.
The thing is, like, what I'm saying is it necessary to use the both of them, like in one currency pair, like both of them, the psychological level and the plotting from last week's high and last week's
I've answered your question, no.
Okay, so it's necessary to use the both.
The more information to have, the better the quality of your analysis now.
Okay, sir. I understand now.
Yeah, so
Thank
you have that information, you have it. The market is giving you information. It's not that
Yeah.
you are using it to take that trade in that particular moment, but you
Yes,
already
exactly.
have that information.
Yeah, I
Okay?
understand.
All right.
Thank you.
You're welcome. Glenn, please go ahead. After Glenn, Lady J, that'll be the last question, and that'll be it for tonight.
Hi, Mr. Bami. I have a question. It's not actually related to this. I think I've grasped most of this. I want to ask, how do you change, like, on MT5 and MT4, you have H1, M30, and all those other trading charts that you can pull up to. So I want to ask, since TradingView comes that it's already H1, how do you change it to like M30 or H4? Like, how do you change it on TradingView?
On TradingView or MT4, which one is it?
On TradingView, how do you change it on TradingView to like pull up the chart for it?
Okay. Can you still see my screen?
Yes, I can see a screen.
Okay. So let me try and understand your question. Is it how to change the time frame or how to change the instrument?
No, it's not a time frame. So, for example, if let me see if I have show you something here. So on MT4, if you open like your MT4 or your MT5, you will see that at the top of, and you open to a chart and you enter a chart. If you're following with me, you will see, like, you can see what I'm talking about.
Do you want to share?
Then
you're on your computer. Do you want to share your screen?
I don't have MT4 on my computer. I have it but on my phone, and I've joined this meeting but on my computer.
Okay.
So that's like the real issue here. So if you open your chart on MT4, let's just say we open, okay, we are currently on British pound now and Japanese yen. Let me open it up on my chart. There we are. So British pound and Japanese yen.
You won.
I was yawning.
Okay, let's just open British pound and US dollar on our chart right now in TradingView. So you'll see that at the top of it on MT4, you see GP pound and comma H1 at the top of it. So if you look at it, you can change it to either M1, M5, M15, M30, H4, D1, W1, and MN. So I'm asking, like, to see that various charts. I'm asking, how do you do that on TradingView?
How do you do that on TradingView? To change
Yes, so like, yes,
M1,
to
M2,
change the various chart modes. Yes, H1 and all that. How do you change it on TradingView?
Can you see the top of my screen on TradingView?
Yes, I can. Yes, I can see the top of the screen.
Okay, let me annotate. Let me draw lines.
I think you should put on
This section of
Yes, I can. Yes, I can see the session.
So what you then do is on your TradingView, it will come with a default, maybe 1 hour or maybe 4 hours. Click this drop down arrow. This arrow, yeah. You can then go to the minute, the time frame. Right. Depending on your subscription level. That's what will determine the number of time frames that you have available to you. Yeah.
So basically, that those things are it means hours, not it
So
doesn't really mean
hours
anything.
and minutes. So
Oh,
1 hour
sorry.
is 1 hour. So if on your MT4 you have M1 minute 1, you have
Mhm. M5, M15.
M5 5 minutes.
Does that paper taste good?
Okay.
Mhm.
I think
You can't eat paper.
you have other participants. They
Remember
need
Uncle
participation.
Baby Uncle Kyle?
Are you able to
Yeah.
move away?
Uncle that
I see now. I see.
me.
Yeah, I see now. Thank you so much, sir.
All
So
right.
silly.
Yeah.
Okay. All right then. Lady J, please go ahead.
Thank you. Thank you. No, thank you. I actually understand. I thought it was like a different,
No, it's the same. It's the same one. So
like a different set.
on MT4,
Thank you.
by the
Thank
time
you.
you get
That's all I had.
to 1 hour, it will be H1. Okay. All right, Lady J, please go ahead. Lady J.